Hello everyone, welcome back to Fundrise Finance. It was an interesting month of February in the markets, where we saw the S&P 500 reach new highs for the year and did good through middle of the month. But when the inflation reports came high for the month of January, we saw a steady decline that continued through end of the month to the decline of more than 4% just through middle of the month. The markets had a good run up through starting of the month, up more than 9%. We had to see some sort of correction, and that's what we got, and we see a decline of 5%. In today's video, I'll show how my portfolio did for the month of February and how much dividends I made out of my portfolio. Let's check it out. Starting with my M1 Finance portfolio, $21,246 currently. So including the overall dividend so far, my portfolio is down almost 2%. In dollar terms, almost $280. Year to date, it's up almost 1.75%. In dollar terms, almost $358. In the last 1 month, it's down 2.2%. That's almost $479 negative. If you compare that to the S&P 500, which is down 2.6% for the month, my M1 portfolio has held up pretty good. From individual slices, when you dig deeper, Staples was best performer, up just 0.1%. Discretionary down 0.5%. Industrials down 0.8%. Technology more than percent down. My dividend income slice down 1.8%. Healthcare 2% negative. Financials 2.2%. My Vanguard ETF pie down 2.35. Communications down 2.43. Materials down 3.5. Real estate down almost 5%. Utilities down more than 5%. And energy, which was a big winner in 2022, being the worst performer here, down more than 6%. I have a link to my portfolio in the description notes below. So you can check out my M1 portfolio through that link. Now looking at the dividends earned in this portfolio for the month of February, we start with AT&T giving us $3.51, then Verizon $3.73, JP $7.41, JetQ $6.14, Nucor $1, Air Products and Chemicals $2.06, OneOak $3.55, Texas Instruments $1.91, Morgan Stanley $2.44, Realty Income $1.27, AbbVie $2.53, Kinder Morgan $3.89, Caterpillar $1.48, Costco 34 cents, Citigroup $2.18, and finally Devo $2.86. I track my investments through Google Sheets, and the one you see here is for the M1 portfolio. So this portfolio currently gives me an income of $868.61. That's a dividend yield of just over 4%. So adding up all the dividends from February for my M1 portfolio, it comes down to $46.30. Now adding my Jan and Feb dividends together, it is $114.65, which is what we see for 2023 so far. Now looking at how the dividends in this portfolio have grown quarter over quarter, we can see this nice laddered upward trajectory. So by the end of March, which is my third month of the quarter that pays me the most, this bar should get higher than Q4. So let's see how March does for us. Now looking at future payments for the month of March, as you can see here, we can expect payments from a wide range of companies in my portfolio. So as of now, we can see it totals out to almost $57. But as the month rolls on and different ETFs in my portfolio declare their dividends, this number should get higher. Now coming to my Fidelity portfolio, whose current value is $20,290, giving me an income of $672. So that's a yield of 3.31%. So here for my Fidelity portfolio, we can see payments coming in from American Tower for $2.54, Toronto Dominion Bank for $2.63, 47 cents each for JetQ and JP. I have one share each of these here, and $1 from General Dynamics, 30 cents from Clorox, $3.76 from Northwest Bank Shares, $1.12 from A.O. Smith, $2.27 from Procter & Gamble, $6.02 from Omega Healthcare, $1.16 from Hormel, 37 cents from Horizon, $1.63 from Abbott Labs, $2.13 from Unum Group, 48 cents from ASML, $1.15 from Paychex, $4.89 from One Main Holdings, and finally 85 cents from Main Street Capital. So adding all of those payments, we get $32.78 as the overall sum for the month of February. For Q1, it's $61.02 so far, and that's what we have as year to date. And then looking at the dividends by quarter, by the end of March, we hope to see this bar higher than Q4. So even for my Fidelity portfolio, looking at the projected dividends for the month of March, We see many payments trickling through. So right now the total is almost $52. And again, as a month rolls in, different ETFs and stocks in this portfolio should be announcing their dividends, and this number should get higher. And that is what we should see this Q1 number growing higher than Q4. So let's see how it does a month from now. Now, coming to my third and final piece of the portfolio, that is from Acorns, where I currently have $4,913. This is a very simple set it and forget portfolio for me. I just invested $25 every week. As you can see here, the last month, the last 4 weeks, 25 each, that's $100, and the others is from the roundups. I've made many videos in the past regarding my Acorns portfolio. This is the first portfolio that I ever had, which I started way back in late 2017, and I've been continuing to invest through the COVID crash and everything. So as you can see, it's simple. The market will tend to go up over time, and that's what we see over here. So this is my Google Sheet tracker for the Acorns portfolio. I see an income of almost $86 here at a yield of 1.75%. Like I said before, it's a very simple 4 ETF portfolio. The S&P 500 VOO being 55%, mid cap IJH being 10%, small cap IJR is 5%, then your international IXUS is 30%. Econs makes the purchases into either of these ETFs based on how they are weighted. Now, there are no dividends from this portfolio for the month of February because IGH and IGR pay me in the third month of the quarter, while VOO pays me in the first month of the quarter, and IXUS is a semi-annual, so that pays me in the 6th month of the year and 12th month of the year. That's June and December. But even here in this simple chart for the annual dividends, you can see the dividends growing nicely and consistently year over year. There are some amazing charts to look at. Now coming to my overall portfolio setup, you can see the current value is almost $46,450 with an income of $1,626, the yield of 3.5%. So looking at the current numbers compared to how it was at the end of January, you can see our portfolio had almost $900 invested, but overall for the month of February, we lost close to $500. The annual income grew by $5. Now, because the portfolio went down in value, the yield went up slightly. But it's a good way to keep track of your investments. Now, looking at the goals that I had set for myself, I had a goal of $1,800 by end of the year, which I am almost 90.5% through. That means another $175 for the remaining 10 months of the year. It's very much possible as long as I continue to invest in the market. And overall, by end of 2025, let's see if we can hit this $2,500 goal or not. Looking at other fund metrics, if we divide the overall income by monthly, it's $136. Weekly, it's 31.28. Daily, $4.50 almost. Hourly, it's 20 cents. Work hour dividend, which is like 8 hours a day. It's almost 80 cents. It's just for fun. Overall, this is the best chart of mine. We can see here, nice laddered growth upwards. So like I said before, by the end of March, we should see this number go much higher than Q4. Let's see what month of March brings to us. So yeah, that's what I had in this video for you all. Hope you liked it. Just remember, no matter what the market does, up, down, sideways, as long as you consistently invest into it, you will reap the benefits. Hope you found some value out of this video, and if so, I would really appreciate if you could hit that like and subscribe buttons. Also, provide some comments like how you like this video, what changes do you like to see, what did you make from your portfolio. Let's keep some interaction going on. And until we meet in the next video, let's continue to make those small strides towards financial freedom. See ya. Bye.